on your military retirement checklist? If so, welcome to tonight's broadcast. My name is Melissa from Insure the Heroes, and tonight I have a very special guest with me who's going to help elaborate on how you can choose. I'll him on in a second. His name is Sean Gillespie, and he is with Redeployment Wealth Strategies. So he's a retired Navy, and he is definitely passionate to be able to explain some of these life insurance options for us today. And if you didn't know, September is Life Insurance Awareness Month. So in honor of that, I've asked him to come on and share his thoughts. So why don't we go ahead and connect him? Welcome, Sean. Thank you so much for joining us here tonight.
Thanks so much for having me.
How's it going?
Going great.
Yeah.
Going great. I've got nothing but good problems.
Except Hurricane Florence, right? Is that her name?
Well, this is going to be like the one time that people who live in Florida tell all the people who live in Virginia
yes.
and bug the heck out.
You know, I'm feeling bad, but I'm also like,
yeah. No,
sure.
So I live in the governor has actually started to order some evacuation.
Yeah.
Not where I live. Yet,
okay. Okay. Because you're in Norfolk or no? You serve Norfolk, but you don't.
I'm in Chesapeake, so it's one city to the southeast of Norfolk.
Okay. Yeah, I don't know. I keep reading all these things online, and it seems like it's a big deal for Virginia, so to speak, so far. Oh yeah, hasn't been in a while. So we're definitely having you guys in our thoughts and prayers about all of that, and really hoping it's gonna get turn around or die down before it hits the coast. So.
Yeah. No, we Homo sapiens, we know enough about these storms now to have a decent idea far enough in advance to do smart things far enough in advance, and the kicker for us, it's our good fortune, I guess, that Houston's misfortune has probably produced an abundance of caution on the part of.
Oh, absolutely, definitely. A lot of regulations are in place now and everything. Yeah. So not only is September peak of hurricane season for us over here on the East Coast, it is Life Insurance Awareness Month. So Sean, if you don't mind, I did a little bit of an introduction of what you do, but if you don't mind following up and telling people, who you are and what you're about these days.
Sure. So I retired from Navy in 2012. I'm a frankly retired ship driver, and I got licensed up in 2013 as an investment advisor and an investment broker and a life insurance agent.
Great.
Operated as a solo practitioner for those 5 years.
You did. That was under Gillespie Advisors, right?
And Gillespie Advisors, that's right. And so
now you've got this new venture going on.
Yeah.
We're excited about that.
Not even 2 full months ago, merged my firm with that of another cranky retired sailor, and Redeployment Wealth Strategies was the firm that came out of that merger.
That's amazing. I love the name. The name is great.
Appreciate that. Yeah, we put a little bit of thought into that. We gave some thought to maybe taking a pretty overt swipe at the Transition Assistance Program class, or PS is what it's now known as. But, decided not to pick that fight. Came down to it.
Sure. And so now, are you primarily working with military going forward, or not necessarily? And kind of tell us a little bit about what areas you serve, what states, or what kind of people.
Yeah, so we certainly intend to serve primarily our tribe. So whether that is Navy or any of the other branches, as well as federal employees fit that as well, because the retirement programs are very similar.
They are, and you're often working together in a lot of situations. So that's great.
Yeah, exactly. Okay. The federal employees, who use the military anyway. So it's a pretty natural match.
Definitely.
We do take some of them come in the door, but yeah, our intention is to serve mostly our brothers and sisters who also.
Okay, great. So you've had a lot of experience working with military members and their military families as a whole, really, for their finances in general, and also some life insurance. So for those of you that don't know, not every financial advisor is either licensed and or practicing for life insurance. And so when you find somebody who does do both, it is very valuable. So I myself am just a life insurance agent and never went to financial advisor side, don't really plan to, but it's so great to be able to connect with and collaborate with another person who's had the opportunity to do both. So Sean and I have kept in touch over the past year about certain life insurance considerations that people often overlook, just from policy design and things like that. So if you are not in the military, or you're not approaching military retirement, some of these life insurance tidbits are going to apply to you. So you might want to fast forward for the bulk of our interview, but towards the end, we're going to go into some general life insurance tidbits. But anyway, our goal is definitely to try to help military retirees who are approaching that decision. Either they're going to be transitioning soon within the next 4 to 5 years, and this Survivor Benefit Plan SVP is on their checklist. So, Sean, for those of you who don't really know what that is, what's the SVP?
So just among the pros, there's some lively disagreement about what SBP is and isn't. And from a purely practical standpoint, I am one of those folks who will maintain that it is life insurance. There are folks who will say, no, it isn't. It's just a continuation of your military retired annuity. Hold up. A, it's something that I pay for. B, it's something that I have to be dead before my beneficiaries can collect on that thing that I paid for. So
you don't have any living benefits.
yeah, and so I mean, in any way that matters, it walks like a duck, it quacks like a duck. For planning purposes. So
it really isn't part of your pension. It gets connected to some of these benefits where you take that some people want to think it's like a pension.
Yeah, it is inherently.
Yeah.
And that's the thing. And basically your pension is really the only thing that it's covering. And it covers it in a fairly narrow fashion. For most of us, I mean, unless we have dependent children, still at the time of our death, then for the most part, you're talking about a benefit that in the vast majority of cases is only through the spouse.
I didn't hear that last part. I think you're coming in and out a little bit. So you said for the majority of most cases is what? I'm sorry.
For the vast majority of us, the only beneficiary over the life of a policy is going to be a spouse. I mean, you do have the ability to cover dependent children, but only up until age like 22 or something.
Right. Okay. That is a significant difference there, compared to maybe some other options out there, or, okay. Yeah, that's definitely huge. Oops, sorry, I'm supposed to be doing this all narrating thing here on the screen. Yeah, so we're covering that the SVP is basically, covering your pension, your military retirement, God forbid you die.
Right. And that's all it is. You can cover up to 55% of it, or proportional 55% of your retirement benefit.
And that's really nice that you do get the option. Do you think most people know that? I mean, there's always briefs that go on in the military, but it's I'm fairly new into this military community. Joe and I have been married for 5 years tomorrow, which is great.
Oh, right.
I know. Yeah, we got Miami planned for this weekend. We don't have to evacuate. But I'm learning that first off, you come and you hear all these acronyms like SVP. Well, that's like way far, out on our radar. But it's an acronym I hear, and then you have so many briefs that are available, via the military. For all of our different benefits, and especially the finance side. But people walk away confused. I know a lot of people have come to me for life insurance, and they don't know whether or not they should take the SVP. I don't always get an opportunity to have long conversations with them because they're busy. And so it's hard for me to understand what they're missing and why maybe the briefs that they attended didn't work out. Because you think, well, you went to a brief, right? So how come it's so confusing, you know?
Well, so one of the reasons that it's so confusing is that the brief typically starts and finishes in 30 minutes or less.
Mm.
And it's being given to a room somewhere between 1 and 200 people.
Wow, that's a lot.
At least, I mean, certainly here in Norfolk, I mean, you know, more or less the capital of the operating Navy.
Right.
I think it's 40 weeks a year.
Mm-hmm.
The transition GPS class is,
Mm-hmm.
is seeing somewhere between 150 to 200 transitions.
Right. That's a lot.
Literally 6,000, 7,000, 8,000 a year.
Yeah.
GPS class. And, you know, 30 minutes for a group that size, you have just enough time to care people.
And you can't really like tailor. You can't have many discussions either. Like so many military families have different family dynamics, very different. You know, it's not necessarily always going to be this one cookie cutter scenario. Extended family, adopted family, and you have all kinds of situations that can go on with that.
So if you have adult special needs children, you know, you're going to benefit from them beyond age 22. You know, if you have a parent, sibling whom you deem and as having an insurable entity, you can at an even higher premium, something more like 10%. But for the most part, you know, you talked earlier about having choices, and it's good that we do have these choices. Specifically, who's got the choices when it comes to making an SVP election is the spouse. The service member really only has the ability to do one thing without consulting with his or her spouse, and that is take the full benefit. Anything other than taking the full benefit requires the spouse's concurrence, and it requires
signature
on that. Yes.
Yeah, right. It's not my wife said it was fine.
A notarized signature from the husband or wife that says, yes, I agree to this.
It's a huge decision, you know, and it's even difficult too. I mean, like committing to the full thing is also a huge decision. But you know, I can see that. You know, do you have any kind of advice for spouses or couples that are approaching this? Like, how can they talk about this? You know, what do you think? Or so I'm throwing you off that wasn't on the agenda, but any quick thing you have to say about how spouses can kind of get on the same page?
Yeah, and so first off, no, it's not off topic. This is the sort of thing that a lot of spouses, you know, probably the easiest way to get this, you know, to get this wrong is wait until a couple of months before it's time to get out, to have the talk, make a decision. So that's the first thing.
It's like, oh, I don't have to deal with it, you know, until then.
Yeah, at least 6 to 12 months out. Obviously, you and I have our biases as professionals in the community.
We would prefer way before then. From a life insurance perspective, you know. So, but you know, people don't. It's not. They're not going to need to do it. They don't want to. They don't. You don't want to if you don't need to. You know, and part of this really is once you get to that point, you know, you're considering options potentially. Not only do you take the SVP at all, do you take it reduced, and then if you're not, do you need any additional or different supplemental life insurance products? And if that's sort of the route you're going, what is your situation like at that time, health, you know, physically and mentally, because that's what's going to allow you to get approved. And so you wait, the longer you wait, that's all the main.
Yeah, exactly. And that's exactly why I recommend people start at least 6 months out, preferably 12, to start figuring out, okay, how are we going to skin the cat? And it's, you know, when people say, well, do I need SVP? Or do I need life insurance? Well, first off, those aren't mutually exclusive options. You know,
right?
You might actually want to do a little bit of both. You might want to do all of it. I mean, if you have, you know, if you're, you know, Commander Duggar and you have 19 kids at home, you know, that full SVP benefit probably isn't be covered.
Right.
So you're probably looking at SPP and then a good deal of private insurance as well. But whether it's this kind of life insurance or that kind of life insurance, because as I said, I firmly believe that this is a life insurance question.
Mm-hmm.
The question is, to me, is not do you need life insurance or how much life insurance. Okay, what's your plan?
Right. What are you doing?
Every responsible plan, especially if you have kiddos at home.
Right.
Certainly, if you have a spouse who is depending on you for that income.
Mm-hmm.
The responsible part of that plan is allowing for the possibility that you might not be here tomorrow.
Right.
And literally tomorrow. So I mean, when my wife and I stepped through this decision, and then Jennifer, literally a professional analyst, said, "Okay, explain to me best case, worst case for them." All right, here's strictly by the numbers.
Mm-hmm.
The best case is we take full coverage. We take full SPP coverage. The day I go into the base to sign my DD 214, can't take by a truck on the way home. Never pay a single premium.
Right. You think of the worst case. Yeah.
And you live to the ripe old age of like 100.
Right. Right.
With plenty of money to pay the pool boy.
Right.
After I've departed the pattern, she says, "Okay, fine. What's the worst case? The worst case is the day after we pay the final premium on this thing, 30 years from now, policy is all paid up. You get pancaked by a truck on the way home from your tennis lesson."
Because that's when it happens, right?
Yeah. And,
it's crazy just the way. We wish we could help people and have the crystal ball when it comes to insurance, but that's not our job. We don't know.
Right.
So,
I mean, and this is the whole point. This is the whole point to end plan. We do this as pros in the military all the time. You start with facts, and then you fill in assumptions where you don't have facts, and then you start building contingencies in to help figure out, okay, what goes on if one of these assumptions turns out to be incorrect.
Right. God forbid, day after, a year or two, 5 years, 5 years after retirement, 10 years, do we need this money? Does our household need this money? And for how long? It's part of financial planning, really. And you deal with this in so many different aspects. And so, just to reiterate some key things here then about the SPP, it is paid up in 30 years.
Right.
So you're not going to pay for it every single day of your long old life. And then also, it's my understanding that you, after you retire, you have like a year or two, right? You have 2 years, I think, to just make your decision, your ultimate decision.
Right.
So doing that, what does that look like the day, like your separation date? So your separation date between those 2 years, you're paying full price, you're getting the full benefit. What is that? Because I'm not exactly.
So you're paying for whatever you elected.
Okay. So you still make a decision upon your separation date, but even
if you decide by not deciding, because if you don't decide, and I actually had this happen to me, not because I didn't decide, but because somewhere between submitting, a couple of autographs in Norfolk and somebody having to process something in I guess Columbus, Ohio, I think. DFAS didn't have my SPP election paperwork, and so
paperwork in the military.
If they don't see an election form, you're going to pay for full coverage.
Right.
I like it.
Yeah.
So, nice little hot tip there is if you really care about this result, if you really care about not
premium. Right.
Or place a follow-up phone call or something like that.
Right. And we know that as military families, we know the paperwork in the military is just terrible. We love you, the military, but it's, you after 20 years, you really learn, especially as a spouse trying to, do whatever we can, from the sidelines. So by that time, I hope we really know, right? To stay on top of it. So starting that process, not waiting 3 months before, is really going to help. move that along. So
So
I think this is,
to revisit one of the points real quick, one of the reasons
yeah.
I say 12 months ahead of your separation date is so that you have the opportunity to comparison shop a little bit for private policy. So you start to get some idea of what the comparative cost and benefits are.
Right.
One of the benefits of a private policy is that if spouse predeceases you, you have the ability to keep that coverage in place and transfer to different beneficiaries. Probably the biggest advantage to the FDP is the fact that it's paid up until after 30 years.
Compared to like a permanent life insurance.
Yeah, you still have the full coverage, but you're done paying premium.
Right, and I think that's what's so hard. I think a lot of what's interesting about military retirement compared to civilian retirement, if you will, there's really civilian retirement is not what it was for my parents and generation before. Right. Millennials, I'm 34. Our world is totally different. We look at employment and money making opportunities completely different. But usually we're not going to really be thinking about retirement as a civilian family until 60 something. You go in the military right away. You do your 20 years. You're 40-ish. When you retire, and so it's kind of like it's very different. It's hard because at 40-ish. Families are not necessarily done raising kids, and so it's just a very different type of retirement, transition period with benefits. And I think families really struggle with, we don't know what our life looks like, for the next 10 to 20 years. We don't know, like, how can we possibly make these decisions? And so I think one of the biggest questions that comes up is should every retiring service member opt into that survivor benefit plan? And I think we kind of touched on it. But what would be the scenario for someone not to take it at all?
Well, it's a one size fits all program. So the program is the program. There's no underwriting. It's kind of like your SPY.
Which is a very good benefit.
Right.
Your broken body, broken mind, you're good.
Yeah, no underwriting is a two-edged blade. I mean, the good news about no underwriting is it's covered. Bad news about underwriting is no underwriting is that you've been healthy enough to serve for 20 or 30 years. You're generally a lot healthier than the general population. And
they kept you in.
Yeah,
because you can go beyond your 20.
Probably get coverage at really, really favorable rates. If you've had a heart attack while you're on active duty, then that's probably something that's gonna push you more toward full FDP coverage. If you're north of 40 years old and male, you've checked off 2 of the 3 biggest risk factors for sleep apnea.
Right.
If you have a sleep apnea diagnosis, the good news is that your rich Uncle Samuel is going to pay for your CPAP. The bad news is that for life insurance underwriting purposes, you just became a 1-pack-a-day smoker.
That is very common, actually, with life insurance. Anxiety is huge. Military and civilian anxiety is like so huge.
Yeah.
And diabetes and sleep apnea, and these things come up a lot. Like, you think it's not going to happen to me, it's going to be an issue. What's wrong with sleep apnea? Who cares? Why can't I get life insurance? Well, actually, it's kind of a big risk depending on where you are.
So this is one of the big reasons I tell people start 6 to 12 months out, so that you give yourself plenty of time to do the underwriting for a privately purchased policy to find out if you're going to get much more favorable rates.
Right.
In my case, to your point earlier, I retired at the ripe old age of 42 with a 14-year-old and a 9-year-old and a 7-year-old in the house. And so I wasn't looking to insure half of my retired pay. I was looking to insure all of it.
Right. Exactly.
And as it turned out, I was healthy enough to qualify for basically twice the coverage CP would have delivered at half the premium. Now, that was for a 15-year term policy.
I was going to say, what's the caveat? Because it's almost like unmatchable, if you will,
Right.
for lifetime coverage.
Oh, SBP as life insurance policies goes is absolutely there's nothing else like it out there.
If you're talking lifetime, if you want this for the end of your life, we're talking age 90 to 121,
Right.
If that's your goal.
Yeah, and so for better and there's nothing else like it. Like I said, it's a one size fits all policy because the premium is a premium, the benefit is the benefit, the payment is the benefit.
Right.
On a monthly annuitized basis.
And I think a lot of people have a hard time going, well, a term, great, okay, like I could save this money potentially depending on my health situation, then I could get this amount of money for this amount of time frame, and I could pay this much less than paying this SBP, but it's only going to take me to 15 years. So you're 40, you're 40, you get out, then it's like this, you could still get a 20, sometimes 30 years might be difficult to lock in. The older you are with the different carriers, I believe it's still possible, but it's not likely that you're going to get a 30-year term. And then so you're talking about age 70-ish, up or down. We're talking a little bit different depending on how long people stay in. It's good for people to think at the age of 70, what is my family going to need as far as income goes? Obviously, your spouse is still, children shouldn't need your income unless you have a special needs child, unless you have that. And so I do like the combination, if not the whole thing, for situations like that. But if you don't have special needs child, or you're investing to where you're growing your assets and you feel comfortable in that journey, you've already done it a little bit in the military, you've got a plan, you're working with somebody like yourself to keep that going forward, where is the need, after 70 to really have that protection?
Right. And
it's hard.
In addition to all those things that you talked about, at age 70, you haven't turned on that benefit before age 70. Your Social Security is also at maximum.
Right.
So there's a lot of different things that go into play. And oh, by the way, there's not too many spouses who look at all these different pieces that fit together and see exactly the same thing.
Right. Exactly.
So whether it's some sort of pro or if it's somebody, I don't know that anybody at Fleet Family Services, for example, is competent or authorized to counsel service member.
Yeah, they get to like a stopping point. From my understanding, every conversation, it's like, well, we can kind of give you the basics, the cookie cutter, but they can't really go beyond a certain point in some cases.
Yeah, they can't make specific recommendations. And the kicker is really, so I've been a licensed agent for 5 years. Part of the transition to the firm. I am basically transitioning my life insurance agent license to life insurance.
That's great. You're sounding really far away. I'm so sorry. I feel like I'm like hanging on every word. If you wouldn't mind, because I don't know. I'm able to make it out, but I'm not sure if anybody else can hear you. So if you don't mind.
No trouble. So what I'm in the process of doing is basically trading in my life insurance agent license.
Okay.
That allows me to sell policies to people.
Okay.
For a life insurance consultant license.
That's right. You told me about that. That's awesome. I'm not at that point yet, but I may do that one day. You know what I mean? That's great. And so for those of you who don't know, you can get consulting for life insurance or for any insurance really, as long as your insurance agent basically surrenders their licensing for an appointments with certain carriers. So that means they are the only, if you will, the only insurance people, and they're giving you that consultation. I think that's going to fit really nicely into your practice.
Yeah, and that was something that Paul and I had decided up front, was that we were going to be appealing the phone. Basically eliminate as many possible conflicts of interest as we could from the service offering.
Absolutely.
Part and parcel of that was putting aside any potential to earn a commission. So, and that, I mean, that doesn't
It's
mean
huge because people don't trust insurance people. I mean, we know that they do not trust insurance people. Insurance people are up there with used car salesmen. So it's very difficult to get, to break those barriers. So I know.
well, so I'll say this much in defense of insurance agents is that no matter how much you want to go find a policy that that isn't going to pay anybody a commission, the likelihood that you're going to find that approaches nil.
It doesn't exist. The insurance industry doesn't work that way.
Yeah.
Even the nonprofit, we've got some military affiliation, nonprofit organizations, and that you want to promote yourself that way. But at the end of the day, if there's an insurance company involved, they are paying commission. That's how insurance works.
If so you hear the ad for AIG Direct on the radio. I'm gonna call those. You're paying the guy who answers the phone for commission. So there's just almost no escaping it.
Yeah, even when it's internal direct, like AIG is not paying themselves commission, but they have to employ, the agents, and they work on a bonus structure.
There are agencies that partner with the only advisors. Low Load Insurance is one of probably the main ones. And I asked them, how do you guys get paid? Like, well, none of our agents are compensated by commission. They're all compensated by
your car insurance agent. I mean, it's just the way it works. So it's kind of one of those things. Like,
from to pay these guys' salary.
Yeah.
Oh, well, you got paid a commission. Oh, how about that?
Right.
So,
yeah. So you might as
gonna
well find, somebody you can trust. And so that was going to be my next question is, what are the resources really that retirees can use to help them in their decision making process? So we talked about the transition tax, right? Can be good maybe as like an overview. You got the time, you got the ability to go to it. Spouses can attend it on their own, right? I think they can.
I don't know why you could not.
Yeah.
I'll tell you that as I looked around the room the day I attended, the week that I attended, everybody in the room had a uniform. And again, whether it's 10 people or 200 people, if there's only 30 minutes being devoted to it, I mean, you and I have been talking for more than 30 minutes.
No, exactly. It's like one of these things I was saying in my last broadcast. Geico just can't do it right. I'm sorry. I'm throwing names out there, but it's so hard to get good insurance conversations going on and cram it in at 15 minutes. And it used to be sold face to face, your local office, and you had time and you took time, and it was just one of those things you did. With everything being over the phone and so fast and online, and not even over the phone. Over the phone, you're fighting to get on the phone with people because they want it all on the website. They want to click a couple buttons and have their whole, whole plan.
Sure.
Yeah, and I know the people that have come to me in regards to SVP, they ask me any questions about that. I kind of tend to stay a little bit outside of the conversation and specialize in the life insurance underwriting side. That's really where my strength is, and independent carriers, and also for just regular civilians or consumers as a whole who are looking at what do I do about cash value life insurance. My standpoint is you need to talk to somebody about your financial plan and make sure you understand what you're getting involved in. Not so much with the SVP, it's fairly straightforward, but it's a big financial commitment. If you think you need it, you think you want it, you are, required to pay for it. So, it's really important to schedule that time, find somebody that you can, go face to face with, get on the phone, get on a video chat, and do some scenarios. Like you were saying, you and your wife went through scenario one. This is what this looks like. I die the next day. I die after transition immediately. Wow. What does that look like? And I think it's hard, just like a PCS, transition is very hectic. As military families, I think we get, into this speed of every couple of years, we've got something crazy going on, and it's really difficult to get together on the same page, sometimes because of location. And so it's just really hard, but you got to find a way, with a big decision like this. So if this is probably why it is one of the biggest decisions, because after So upon retirement or upon separation or retirement, you either made the decision consciously or you didn't decide and you get your automatic. You have 2 years to technically alter that decision, right?
Provided
Okay.
you not turn down coverage.
Okay. So if you turn it down, you cannot get it back.
Once you accept coverage,
Mhm.
you don't reduce it inside that 3rd year.
Okay. So you accept it
Right.
by accident or by choice.
Right. Yeah. Once you reduce or decline coverage, you can't turn it back on.
So you got to be sure.
You can't increase it. And
It's a
so
great benefit. You
a
cannot
big
compare that.
big part of what I tell anybody
Mhm.
who's having these discussions with a spouse is, look, if you have a shred of doubt
Mhm.
about, take the full coverage, and then take the couple of years to figure out,
Right.
okay, is this enough coverage? Is it as efficient as we want it to be?
Right.
Do you really want the coverage forever, or do we just need?
What's our budget looking like?
Yeah.
What is that all looking like? Because after 2 years, you cannot. You're stuck. You are paid. You are stuck in it. Like there's very few circumstances, I guess, where you can get out.
Yeah, at the end of 3 years.
Okay.
You have from the end of the 2nd year to the end of the 3rd year.
Okay.
To make a different decision.
Okay. Now, what if you take a reduced benefit upon separation?
Right.
And then you decide within that, period that you want to take the full. Can you?
No.
Okay, yeah. So you shut it out, take it all.
Will not happen, which is why I tell people, if you have the tiniest little bit of doubt about this,
and that's like life insurance. It's very similar. And for those of you who don't know the industry and the underwriting, because insurance companies or people who are giving you this benefit don't want you to change your mind after you get sick. They don't, and I don't know if that's the philosophy behind the SVP, but of course it's easy to then say you need it when you really need it. When you find out you're sick. Kind of unrelated, because the SVP doesn't do that, but.
Yeah, and with SVP, it won't have anything to do with your health. They won't tell you no because you're sick. They're going to tell you no because you took a smaller coverage before, and you don't let it increase it.
Could be the way that the premiums are funded and all that stuff. That's why. Yeah, so it's definitely a huge decision, and I think that's why people like to look at maybe the combination or not taking it at all, because it's a commitment financially that they're going to make every month. But it's not something they pay. It's just deducted out of the retirement. All right, so we really have kind of naturally touched on these things, how retirees can use life insurance in place of or supplement to. And we talked about also insurability, how that plays a role, especially when you're approaching your VGLI. You don't only have the SVP, you also have the option to take your veterans life insurance benefit, which can be higher in some cases. But if you're a smoker, or if you have some highly rated health condition, it depends. You may not find a better life insurance rate. And so you need to get on the ball with these things ahead of time.
Exactly right. In the all of the same planning factors that go into your survivor benefit plan decision, they also go right toward your VGLI decision as well. In most cases, as long as you're not a smoker, as long as you don't have sleep apnea, as long as you haven't had a heart attack before retiring, you'll probably be able to get better coverage, more coverage at a better rate.
Definitely.
By the way, coverage where the premium won't increase automatically.
Right. Yeah, and I don't think a lot of people understand that. I've talked to a handful of veterans that have said, "Oh, I just took it. I just didn't know." And so they just don't even think about it at all as a supplement to their service members. The SGLI while they're in, it's like, oh, the military's got that. And so it's really a big deal to look into this stuff ahead of time. And so you have some helpful insights when you are doing a life insurance needs calculation. And so I'm so thrilled that you threw this into our conversation, because we know that people really struggle with using a life insurance calculator. Either they don't trust it,
Right.
they're nickel and diming it. This thing can't be right. I don't need that much life insurance. Or they literally just don't understand how the pieces work together. So if anybody wants to pull it up with us now or later and kind of run through some examples on their own, lifehappens.org is a nonprofit, educational life insurance consumer website. So you can find it there. It's also on my website, insuretheheroes.com/calculator. It's the same calculator. But if you want to pull that up, you can kind of see some of the stuff that Sean is going to talk about. So there's a section on there we're talking about debt.
And so I'll start with a and put a plug for the calculator on the site. I actually checked that calculator out myself.
Yeah.
And I can verify for your viewers that it is very. I've used the Life Happens calculator many times, walking people through decisions and how much. So I'm just leafing through the different fields here. So.
Yeah, I think one of the ones is final expenses, usually, burial, all that, medical.
The 15,000 that you'll see for final expenses is a pretty decent estimate. And so what that is code. It's life insurance professional code for what does it cost you to get dead.
Yeah.
Burial expenses, that sort of stuff. So paying off debt, whether it's bad debt other than your mortgage, which you see in the calculator.
Right, they want you to separate it.
Which is the mortgage, right?
Mm-hmm.
And then, one of the things that I really like about this calculator is that, one of the questions is, require college funding, and if so, if the answer is more than 0, what are their ages? Do you want to send them to a public college or a private college? And,
right.
You have the ability to pretty quickly toggle back and forth between the two things, to give you the difference between a 4-year public and a 4-year private college.
Right.
Is about $100,000 in insurance.
Yeah. And it'll tell you that at the end to break out like each section, which is really nice, because someone who's skeptical can go, oh, well, wait a second. They were inflating the college. They were inflating this. Well, okay. You don't have to one and done this. People could redo these calculations a couple times over date night. Yeah. It's not necessarily fun, but it's a couple seconds.
It's like a lot of what if with this calculator.
Yeah.
And inside 15 minutes, get a pretty decent idea of what the
yeah. And so you were talking about before the college, and you enter in your debts. And so we were talking kind of offline about how people don't quite understand that when you're putting in the debt. So let's say you've got, just throwing a number, 2 cars, 2 crazy cars, a little bit of credit card debt, and you've got like 60,000 in other debts, and you have $250 left in your mortgage. Random number. Maybe you own a couple houses for being in the military, and you need to make sure they're all paid. So you put whatever mortgage amounts are in there. But so when you put those 2 things in there, that's going to reduce the need for maybe future income, because right now you're used to paying these debts. So when you get to, I think, like pages 2 and 3, it's going to ask you your income and then what is your surviving spouse going to work. Well, when you pay off all those debts, what are you going to need? So that's one option. You could not pay off all or any of your debt and then factor that into the income. So it's like a couple ways you could do it. However, you and I are fans of over-insuring yourself a little bit.
That's me as a consumer. That's not me as a planner or as a guy who knows life insurance. That was purely my preference as a husband and father.
Yeah, you don't want to be short or something like this, You
get to that next page of the calculator and start plugging in income. If you have $100,000 of before tax income right now, then you decide to pay off every penny of debt with a life insurance.
Right.
If you turn around and you plug in $100,000 in income paid, then you are going to be a little bit building a little bit of slop in your company.
And I think a good recommendation is maybe at least, maybe at the lowest 60% of your annual gross income. I mean, purely your preference. But
I would say probably 60 to 80% because the vast majority of cases, a life insurance death benefit is tax free. And so you don't have the same tax implications with life insurance income derived from life insurance proceeds as you do with earned income year over year.
Right. Yeah, and so that's really creative that people could go in and really do different scenarios and then see what their results are. You're also talking about, I'm going to move this a little bit along here. So we are getting near to the close. We don't want to bore you guys too long on life insurance info, but it's really good. This is good information. Maybe you're catching the replay of this when you do have an hour to spend with us. We appreciate it because it's just going to help your situation, really. So, you're talking about the tax rate too, and that they kind of have like a default one in there. And that's something that maybe after 20 years of filing tax returns, you have an idea, but that changes a lot. So,
yeah, and this is just, you make an assumption and just understand, you can play with the marginal tax rate in that calculator. That's on the next page. After you can play with that tax rate as well and see what that does what that does with coverage.
Yeah. So, yeah, and these calculators are designed, to look out for your best interest. They're really not designed to inflate everything. If you're a super math nerd, you can, figure out the back end of them. But I, at one point I was building my own and realized you come to the similar results. So you can go through all these different insurance companies, have life insurance calculators. A lot of financial planners will have a calculator in a worksheet. And do this all manually, and you're going to come up with similar numbers. But I know a lot of people have a pet peeve. You're not going to get the same exact number.
I've run the Life Happens calculator for before, and thought I ran the very same set of numbers. Still came up with the reason that I like the Life Happens calculator, again, you can say it on the site, is because it's just really simple. And because you can get in there and you can do some quick what ifing, what if you do this versus that. You can play with it a little bit and kind of explore all of the trade space and figure out, okay, what's the reason that fairly quickly.
Yeah. It's a nice user interface. So it's kind of like you just plug it in, you get a good, decent amount.
Yeah. The main thing that I think people need to look out for in that calculator is the interaction between paying off debt and income. So if you have your income and that's you need all of that house payment. If you make your house payment, so and your point about the calculator being put together to kind of look out for people. The calculator by if you pull the top layer of the onion back up, you find out that it was established by something like the 8 largest for-profit insurance companies.
Right.
So one of the things, one of the people that calculator is looking out for. So.
Yeah, and I think that what's hard too is that when people are doing it, they're doing it in that year. And I always like to tell people, consider your current situation because that's how insurance is supposed to be underwritten, all that stuff. Doesn't mean you cannot change it, but then in reality, it's fairly difficult to. You can't get new life insurance every year. You can look at your life insurance needs, but medical underwriting and when you're locking in a policy based on a lower age, it's not really practical to get a new policy all the time. So it would seem like, as a consumer, well, why don't I just do this year, in 5 years? Like you want to think about, okay, God forbid, you don't need all this coverage anymore in 3 years. All right, redo it and then figure out what are going to be your options. Number one, what can you do with your current plan? Sometimes insurance companies will let you reduce your coverage. I would really caution people to really think about this to see if they even have that option, number one. If you reduce it, it's not going to be that easy to up it again, in a year or two. So it's, and a lot of times people, they don't trust the life insurance result as far as a needs calculator is concerned, but they don't quite realize that the way the banding tiers work, for insurance coverage to get 50,000 more sometimes is not always a big price difference. It depends. It depends on where you are. It's going to cost you probably about the same, if not less, to get 250,000 than it would for 200,000. So it's a new point. You're spending a ton of time arguing over $50,000. Doesn't matter, And so you do the best that you can to get your perfect number, and then you get your quotes lower than if you're not comfortable with insuring yourself for that much, or higher, if you got more room for that. So we're going to get into here pretty soon how people can connect with you and what some of your new services are if you've got this going on in your new venture. But I want to know, who is your hero and why?
Oh gosh, I have,
if you had to pick one, just one.
So when I have to answer this question as a security question,
oh God, okay.
For
you're telling us our passwords here.
Yeah, in case I forget my password to get on a thing.
Mm-hmm.
This is the thing sometimes, who's your childhood hero? My childhood hero was Murray Boa, and he was this scrappy little dude who played shortstop for the Philadelphia Phillies.
Okay.
Who never took nothing from nobody. I mean, at the ripe old age of 48, I have more heroes than I could name.
Oh yeah, absolutely. Especially being a military retiree.
Yeah, not least that. I'm in the. Yeah.
Is your wife in the room?
I'm in the room. Yeah, but there's just a way to pin me down on one of them, because I was in the room when two of the kids were born. I subscribe to Robin Williams' theory about husbands being in the room for childbirth. Sharing experience. He's like, son, if you're not involved, you're not sharing an experience.
That's funny. So no one specifically. Too many to name?
Yeah, really too many.
Okay, that's cool. No, I'm not trying to put you on the spot.
Yeah.
So how can people connect with you? Because I know your website's under construction.
So yeah, the website's going to go out sometime within the next week.
Okay.
The web address is going to be redeploymentwealth.com.
Okay, redeploymentwealth.com.
Yep.
That's great. I'm going to link to that in the comments so people know. And then otherwise, I think you're pretty much a call me kind of guy, right? You're not so much on social media right now. No. You're very active in messaging and stuff like that, but
yeah, we'll have a Facebook page up as well. The Facebook page is up already, actually.
Yeah. Okay.
We're just not active on it.
Okay. Great.
When the website goes live, we'll be a lot more active.
And this is you are offering you do have your own financial planning firm. So
that's all we do.
Okay.
All we do is deployment wealth strategies is that.
Got it. Specializing in military transition issues, not limited to that. You'll do some life insurance consulting, which is really great. That's going to be a big need. So I'm looking forward to following you and everything that's going on. And we have some topics here we actually do not cover. I mean, we'll follow up with the series going on. I feel like there'll always be some things going on. And so may not be necessarily life insurance, but I'd love to have you on the show again and talk about some other financial tips that you had to offer.
Sure.
So I definitely want to thank you. If you had to leave this audience today that has hung with us the whole time, what's up, Rochelle? You're so awesome. Love you, miss you. No, it's an important topic. So what would you leave off, or what would you leave people what's your one last thought on SBP? Trying to get that question out.
Well, so I'll answer your question with two last thoughts. So one of them is to just reiterate, if you have a shred of doubt, then it's time to make the decision. Take the full coverage and reevaluate it much more deliberately. Among other things, when you pay that premium every month when it comes out of retirement, you'll see it.
You're gonna feel it.
You'll know how
It's not necessarily bad if you're content, you know.
Right. You'll know how you feel about it 2 years. So the other thing I would say is this: if you have an experience like I did, where you're sitting in a room with 100 or 200 other people, and the guy is covering it so fast in 30 minutes that that you feel more afraid than you do informed.
Yeah, that I feel like that would be a very overwhelming situation.
And please talk to somebody about it. And by somebody, I mean somebody not your neighbor.
Yeah, right. Yes, please. No, do not take this kind of advice.
Here's why, and it's not to talk down about it.
Right. It's not that what they're saying is not ultimately going to be the best thing. It's just you need to get better advice. Mm-hmm. Right.
You know, one size fits all program is not a one size fits all.
Right.
You have to do what you
mm-hmm. And get your goals together. You know, dream a little bit. You know, you kind of already know what your plans are for the most part as a military retiring family. What's 5-year plan, right? Doesn't always work out that way. What are you, what are you hoping for? And what do you think is on the next 5 years? From your finances. That perspective. So this is really great information. We hope it's been very helpful for everybody who is approaching this decision or in that window. You know what I mean? And so do reach out. Let us know if you guys have any questions, and we can put together a follow-up series on that, or you can reach out directly to Sean, and he can help you go through that planning on your own, or have that individual consultation that's not going to be as overwhelming as a brief. So thank you, Sean. I really appreciate your time tonight. I'll let you get back to life with a house full of teenagers. Wind down a little bit from that, and we'll be talking to you soon.
Sounds great. Thanks, Melissa.
Thank you. Absolutely. Have a good night.
Sure thing. You too.
All right. So thanks, everybody, for sticking with me tonight. Melissa at InsureTheHeroes.com. You want some more life insurance information, you can hit up InsureTheHeroes.com video series. So if you don't know, Insure the Heroes is an independent life insurance brokerage that helps military families, past and present, business owners, and parents. So do stay tuned to more collaborations like this, and I hope that you have a wonderful night.